What up, guys? Another episode of UniFiTV here, coming right at you. So for today's episode of UniFiTV, I'm going to be talking about everything that I learned over my, 6 weeks of my internship. So I guess we'll start out with the basics and just do an overview of what I've learned about overall about the finance industry, specifically the equipment finance industry. So basic terms such as vendor and end user were alien to me before the internship. And so I had to have a basic foundation, basic understanding of the equipment finance language before I could start making sales, making calls. So I had to learn vendor, user, and then other basic finance terms like adjustable rates, fixed rates, things of that nature. And so that was pretty straightforward. Another thing I learned is the high level of competition within the industry, which came as a big surprise to me because I didn't think that equipment financing would be very profitable, just because I didn't imagine many people required it. However, over the course of the past 6 weeks, I learned how important it is because of it helps businesses cash flow a lot, and that's what equipment financing is for, is to keep that cash flow positive and to allow for businesses to invest their liquid capital in other places in their business rather than having to put it all in one lump sum towards a piece of equipment. Another thing I learned, which isn't necessarily just about the equipment finance industry, but I guess loans and finance in general, is looking out for deals that can trick you. So what I mean by this is oftentimes I'll hear, I have a great rate with my bank of 2.5%, something very low. And usually there's some fine print attached to the such low rate. So for example, what I mean is a lot of times those low rates are home equity lines. So they force you to attach your business to your home. So if your business goes under for whatever reason and you can't afford to pay the debt back, then they take your home because it's a home equity line. Another example is an APR. So you'll have a 2.5%, and then 6 months later, it'll bump up to some absurdly high interest rate, like 15 or 16%. And I see both a lot of banks and other equipment financing companies do these type of loans, which kind of rely on consumers to not be educated enough to look into it and say, it's not as good as it seems. The last thing about the industry is staying vigilant for fraud. And unfortunately, this is just a part of the industry that's unpleasant, but is necessary to look out for. People are going to try and scam companies any way to try and make a quick buck. Now, the vast majority of people that I've worked with are honest, good-working, hardworking, but you always get that one or two that call in and say, this is my company, and they're just trying to commit fraud. Essentially, they're just trying to take whatever $70,000 or whatever and just drop off the face of the earth, essentially, and just not take calls and anything like that. Just a free $70,000. And staying vigilant to this is necessary because it protects real business owners from getting trapped in companies that that take a lot of fraudulent loans, or I guess fraudulent business, and it's also necessary for the health of the lending institution. So after the industry, I think I'm going to go into sales, and this is probably where I grew the most because prior to this experience, I had no experience in sales, especially doing things like cold calling, which I found incredibly difficult, especially at first. So I guess my biggest surprise or piece of advice would be to stay persistent. When I started cold calling, I was hoping for a 25% success rate. And after, even just a few days of cold calling, I found that to be I guess, grossly high of an expectation. And anyone who goes into a job where they're going to have to cold call and do sales, which is essentially almost any job because you're always selling something, either yourself, a product, a good or service. And just know that if you're marketing to a lot of people, your success rate is going to be like maybe 2 or 3% depending on the product. And not it's important to not get deterred by something like this. And it's hard, I know, to pick up the phone one more time and call a number that you realistically know you're going to get shut down and told no. Sometimes it's worse than that, but you always need to keep your head up and just know that it's never personal, in that you just have to power through it. I've gotten to the point where I don't really mind cold calling anymore. That sense of rejection, I guess, doesn't intimidate me as nearly as much as it did my first few days worth of calling. You get told no enough times, it loses its negative impact, so to speak. It's certainly not fun to be told no, but at the same time, I understand that I'm being told no and that I just have to move on to the next one, because there are people who require my services, who want what I am selling, and I just have to find those people. I just have to call enough people to eventually find those people. With this, confidence is key, because if you sound like you're unconfident and you aren't having fun and you're not enjoying yourself, then people generally don't want to do business with people like that. And it just gives off the impression that you don't really know what you're talking about. So if a customer has a question, then they would be hesitant that you could actually answer the question correctly. And that's bad. That's a bad impression to give off. My boss always tells me to have fun with my calling and my sales, and I try to. I think I didn't really understand it the first few weeks, but actively listening is really important, because when talking on the phone, customers will say things and drop things that I will then use as points of communication and allow myself to become more personal with them. So, for example, I was calling an individual and he was from the same area that I grew up in, and so we started talking about sports teams, and it really broke down that barrier. So it made it feel less like strictly business and more of like a personal connection. And those personal connections are the type of people that others want to do business with. And so I think that having fun with it is so important, because it makes it enjoyable for me as a salesperson who, like I said before, making tons of cold calls is difficult. But at the same time, it makes it enjoyable for the person I'm calling. And if we decide to do business with each other, then instead of my phone number coming up as like something dreadful or something that I guess they're not looking forward to, it's they are very willing to pick up the phone because there's like that personal connection. The last part about sales that I think I'd want to talk about is to not be too aggressive. And this is something I was definitely bad at the beginning, where I would always be super hesitant and not want to annoy anyone by calling someone either twice in a day or a few times over the course of a week. But I realized that in order for me to be successful at my job, I had to make contact with these people repeatedly for various number of reasons. It showed that I was committed towards their business and their goals as well with them. It showed that I have good customer service, that I am willing to work hard for them, for their business, and I value their business. And so being more aggressive, obviously there's a fine line between appropriate level of aggressiveness and going over the line, and that's just something that people have to, including myself, still have to figure out. But I have good guidance here at UniFi to ask and always bounce ideas off with a lot of years of experience. So I'm always confident that what I'm doing is the correct move. But yeah, being too aggressive I always saw as annoying or pestering potential clients into not wanting to do business with us. But in reality, it's often necessary to get the result that is needed. Now, I'm going to turn to corporate America, I guess, so a wider picture. And this is, I think, my last, section that I'm going to discuss about. The number one thing I learned is to never burn bridges. Many of the guys who I work with in my office are constantly in contact with people from other equipment financing institutions, either for ideas, selling deals, things of that nature, just to talk about the markets. And what I've realized that even if they had worked at other financial institutions, they never burned bridges. They always left on a good note and kept the relationships at least not sour. And I see a lot of value in that because there's nothing to benefit. There's no gain from having, burned bridges. You don't get anything out of that. But with when you have connections throughout the equipment finance industry, you have a lot of available resources and options to help you out, whether it's prospecting, reaching new clients, it's getting insight into what the competition is doing. It's always necessary to have those good relations because you never know when those relations can benefit you and vice versa. You benefit them. Most of the things I've seen, most of the deals, or I guess cooperation has been mutually beneficial for both our company and whatever company we've done business with before. So I think it's important to not burn bridges, to keep lasting relationships throughout your market and industry. The last part about corporate America is to make connections at any time. There's no such thing as a bad connection to make. The more people you know, the more powerful you'll be, the more resources you have at your disposal. Even if it's not directly related to your industry, you should always be asking your clients for referrals, people they know who might need financing, or just in general, people who might need your good or service. The more well-connected, like I said, the more successful you're going to be. And as the intern for the summer, I made it a priority to talk with as many people as possible, to build relationships with all the people who I work with, and tell them my interests, listen to theirs, and just connect and network. And so they say, hey, I know someone who, is really good at this. I'll set you guys up to have lunch or coffee and you guys can talk about it. And those things are valuable, and they make you grow as an individual, as a salesman, as a business person. And making connections is the most important thing in business. So the more connections, the better business person you are. So I think I'm going to leave it there. And I know I kind of breezed through a lot of stuff, but it's a lot of stuff that I've learned over the course of the summer. And I'm very appreciative of the opportunity that I've been given here at UniFi Equipment Finance. All right, I'm going to leave it here. This has been another episode of UniFiTV. I know it's been a little different than the other episodes, but we're just going to leave it here. Awesome. I'll see you guys next time.